Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on this exciting Sunday. Wow, what an honor to have 1,600 people on our call already, along with 5 incredible guests in the silver industry, and what we'll say is certainly at least an intriguing time in the industry, and I think has the potential to be a time. I think this whole month we're going to be looking back on in due time. So anyway, nice to have a call to prepare for the open. Let me pull up our silver chart here so you can see how it looks on the close at Friday. There's silver. Amazingly, a couple spoofs here and there, but been floating around, not moving too much in the Comex price. Although that's the kind of thing we'll be getting into tonight. At some point, do people stop caring what the Comex price is, especially if premiums are soaring? And for one reason or another, whether it's the Comex stiffing arming people or changing the rules, if you can't get metal there and the actual cost of metal is much higher, will that be known as the price? We will dig into that. And real quick, before I introduce our panelists, I would just like to give a special thanks to Silver Sands Resources, a silver company run by Keith Anderson, who you've seen on the show, a good friend of mine. I'm been excited following what they are doing. Certainly, if you're of the school of thought that silver is going to rise in price, then take a look at Silver Sands and see if that's something that might be a good fit for you. As always, consult your financial guidance and counselors, and make sure you understand the risks of what you're getting into. But I just did want to mention that since they are bringing us today's episode. So thank you, Keith of Silver Sands Resources. And with that said, let's introduce our all-star panelists here. First of all, Dave Kranzler. It's been a week or two since we've had him on there, so I can't even imagine what Dave has found since then. So Dave of Investment Research Dynamics, welcome on in, sir. How are you?
Doing okay. Thanks for having me back on.
Well,
looking forward to this.
It's a pleasure, and excited to hear what you're thinking. I know you took delivery of a Comex contract once before, so we will certainly want to hear about that. Andy James Bond Schectman of Miles Franklin, welcome, sir. How are you?
Good to see you, Chris. I'm well, thank you. Good to see you, fellas.
All right.
Likewise.
Feel free to pick up one of those guitars and serenade Silver. Bill Murphy, the legend. And Bill, before I guess I'm going to start introducing you, whether you like it or not, the guy who for years was saying, watch out when silver breaks through 21, and then it shot up within weeks to 29. So Silver Bill Murphy, the legend of GATA and La Metropole Cafe. Welcome on in, sir.
Thanks for having me, Chris. Great to be here with such a good group.
Well, it's a pleasure. And then calling in from Israel, it's a little bit late, but Rafi Farber of the Endgame Investor, who could actually tell us tomorrow's silver price today. So Rafi, thanks for being up late at night, and great to see you here, sir.
Good to be here as well. It's an honor to be with you. I follow a lot of you for a long time, so being part of it is it's a new thing. It's really cool.
Well, appreciate that. And of course, David Stein, who runs Kuya Silver and has done actually a lot. I mean, has quite an interesting base of knowledge. Certainly can talk about the mining side. I know a lot of people have questions. What happens if something happens to the Comex? What legal responses could miners conceivably take? So David, it's great to have you back on here again. I think this is your second Sunday panel this month, and great to see you again.
Thanks, Chris. Yep. It's the third if you include the Super Bowl one.
Oh, that's right. That's right.
Yeah.
We have been doing a lot of these, and it's been fun covering this.
Yeah.
So I would suggest we dig right in, especially Rafi. I know it's late, and Bill Murphy has a commitment as well. So let's start right with the Comex. And I guess to put a question out there right now, if premiums are elevated, and you've seen some of the dealers I brought on talking about how it's hard to get even large orders for wholesale bars. So it seems like there's a direct economic incentive on the table. People are willing to pay a higher premium. Why aren't we seeing more delivery occur already on the Comex? Are we about to see that in a big way? Rafi, I know you're following this closer than most people on the planet. So what do you think?
Well, I think we're going to see a big delivery day on Thursday. I think that's when the next contract delivers. So I mean, the Comex has the Comex or whoever's behind pushing the silver price down, and there is a good reason to push the silver price down, which I'll get to in a minute. I think that the lower the silver price goes into the delivery day, the more deliveries will be made because it'll be more worth it. So the bullion banks have a problem here. Now, on the one hand, they want to keep the price of silver low. On the other hand, the lower they keep the silver price into the delivery day, the more deliveries that they'll end up having to deal with later. So the issue I really wanted to cover is that why do the banks have an interest, or why does anyone have an interest in pushing the silver price down, at least the paper price, when the premiums are so high? Because I mean, you could say technically, yeah, they have a big short position, they don't want to cover it, it's bad for their balance sheets, and that's all true. But there's a deeper reason why there would be a vested interest in pushing the silver price down, because there's really two kinds of demand for silver. There's industrial demand and there's monetary demand. So industrial demand, the futures price is pretty equipped for. It's not that off, because if the futures price for silver was really way off for industrial demand, we'd see industrial shortages. We'd see you wouldn't be able to get silver for solar panels or iPhones, or it wouldn't be in the market. But the futures price can clear industrial demand. But monetary demand is something different, because monetary demand can suddenly wake up in a huge torrent, in a dollar panic. And that's what we saw on the late January, early February. We saw monetary demand suddenly wake up all over the world all at the same time. And that the futures price is not equipped for. So the interest in keeping the silver price down, at least the paper price, is to prevent it from sustained monetary demand. Because if the price of silver is stable, at least the paper price, then people say, there's no problem with the dollar. We don't have to panic into silver, because that's the evolutionary or social psychology of humans. When they have a monetary problem, they go to gold and silver. They've always have. They don't go to Bitcoin. They don't go to diamonds. They go to gold and silver because that's what money is in society naturally. So if the price of silver goes up, then it becomes a monetary feedback loop that people see the dollar is collapsing, they buy more silver. The reason that industrial demand is a negative feedback loop and it's self-balancing is because money is the thing you want to part less of when prices go up. So you buy less of whatever it is that you're buying. But with monetary demand, the more the price goes up, the more they buy it. And if silver keeps going up that way, it can destroy the dollar. And that's really the interest here.
Yeah, and Rafi, something you mentioned in there about the industrial, and that's when to watch out. Although it feels like we've already seen signs of that happening now. You've reported in your great column that has become mandatory reading. By the way, I just, everyone at home, he's not paying me to say this, but I did send him a message the other night where when I was going through Power Hoops during the Texas energy scam that they hoisted on here this week, it was nice when I wanted to catch up with the markets. I was thinking, we're going to most easily do that. So Rafi, that was you. And I mean, now we're seeing backwardation, and I had David Jensen talking about how the silver lease rates have gone up. So would you say that we're now seeing signs that, this is coming to the industrial level now?
I haven't seen any reported shortages of silver for industrial purposes yet. But I am seeing the term structure of silver tighten. It's going in and out of backwardation on some timescales. It's not defined as backwardation yet, but really there's nothing special when backwardation hits. It's not like alarm is pushed and then all of a sudden something changes. It's just the tighter the term structure is, the tighter the prices are from the present to the future. That just means there's more of a shortage. But so you'd have to get to severe shortages for there to be an industrial problem. I don't think I've seen that yet, but if we do see an industrial shortage, then yeah, we're really pushing the limits here.
Well, and I appreciate that. There's Rafi's the Endgame Investor on Seeking Alpha. So Bill Murphy, you actually saw the whole thing with the Hunt brothers. You were there for 2011. and you've traded these futures. What would you add to that? What are you thinking at this point?
Well, I'm anxious to hear what the other guys have to say. I don't think I've ever been so disgusted in my whole life about the rigging of the gold price. It is ridiculous. We have right now the most bullish situation for gold and silver in history in terms of everything you can think of, the government spending, the debt, the problems. It just gets worse and worse. You got copper going sky high. What trouble with the economies? Silver, as we're just talking about, industrial metal, can't do a thing. It's just getting worse and worse. You've got gold going down for 6 months. The HUI makes new lows. It's the most bullish time I've ever seen. I expect silver to explode at any time, and it never happens. You can even have this Reddit crowd come in, an incredible boon that's exposing the manipulation, the suppression, getting coverage that the mainstream press won't give us at any time of day. And every day, every week, and that's what they want, as you're talking about. They want to make it so people don't want to go into gold and silver and the shares, go to Bitcoin, go on the NASDAQ, go in anything to make money. But for the reasons that you and Rafi just mentioned, get out of gold and silver. Now, do I think that's all going to change? And am I as bullish as ever? Matter of fact, more so than I've ever been, but it doesn't seem to make any difference. It's just every day, every week, it's the same. So I have high hopes, and I'm tired of being disgusted and disappointed. So on that, I'll turn it back to you and the other guys.
Bill, I feel like you're holding back today, but is it safe to say that Jeff Curry of Goldman Sachs didn't, calm any of the concerns you had in the market?
You got to be kidding me. You got putting money, people invest in an entity, and it's got to be hedged, and they say, God forbid, don't worry, the price might only go up for a little bit. Why would anybody invest in that ETF? It doesn't make any, matter of fact, it's the stupidest thing I could ever imagine. What do you mean hedge? Why don't you buy hedging? Because you can't, you might not be able to get the silver. So you're buying instead of, no, you're selling. It's always selling with these people.
Well, Bill, fortunately, I'm going to pull that up here because I came prepared today. Where is Jeff? But Bill, I thought this might be the case. And since I knew maybe you might not be too happy, I have a nice Britannia here as Lawrence Lepard is joining us on the show. I'll throw a Britannia in the pot for any of our panelists today who can even come up with, it doesn't have to be a plausible explanation of what they could possibly be hedging by hammering futures on the Comex. But if anyone can figure it out, I will throw that in there. Yari, you can keep an eye in the chat. Maybe there's someone on the planet who can understand what Jeff Curry was saying here, but give me a second. We'll make sure we got the sound there and we'll play it just in case anyone has not yet heard. And Lawrence, welcome to the show. How are you, sir?
Great. How are you guys doing?
Hey, Lawrence.
Wonderful. Thanks for being here. Lawrence, you're just in time as one of the smartest minds in the silver space. I don't know if you heard, I just threw an ounce of silver into the pot. If anyone can figure out what Jeff Curry of Goldman Sachs could possibly be hedging when he says the ETFs, let's hear it in his words.
But the silver market,
and then you
go on.
They just sit. Those other ounces just sit. They don't move.
Not that big, but I guess my question is, forget the ETF. In terms of thinking about how are you going to create a squeeze, the shorts are the ETFs. The ETFs buy the physical, they turn around and they sell on the Comex to be able to hedge that physical position.
Now, Bill Murphy, ounce of silver on the line. Given that this ETF is advertised as a trust, and if you send the money to iShares and they give it to JP Morgan, they buy the silver and put it in the pile. I know the pressure is on, buddy, but as someone who's been there since the Hunt brothers, can you take this ounce of silver? Please take my silver. Can you figure out what this man is hedging?
Well, like Dave, I bought some silver on the futures exchange and the Comex myself, taking delivery of it. I don't have any freaking idea what this guy is talking about. It doesn't make any sense. Why aren't, again, I just mentioned, why aren't they buying in anticipation when all this demand might come in? It makes, I'm not saying they should do that, but I'm saying that makes as much, doesn't make any sense. That's how some people use the word, that's how desperate these people are getting, if they have to come out with some nonsense like this.
Well, Bill has not been able to win the ounce of silver. Andy, I heard you chuckling over there since you work for a bullion dealership, 30 years in the business. And like Bill said, my guess is that if somebody questioned him, he would probably say, well, you got to have a hedge in place between when we receive the money and when we buy the silver. But if they're offering long exposure and someone sends their $25 to iShares and they're waiting and they haven't purchased the silver, if anything, you would get long a Comex future.
Thank you.
So Andy, with some silver on the line, can you find, you don't even have to give me a plausible scenario. Give me something silly, like, aliens come down into Jeffrey's living room and they do a reverse hedge. Give me something that doesn't take the silver. Somebody take it, please.
The only possibility would be as if they bought the silver prior to selling the shares, but that's not how they do it. They sell the shares and accumulate the silver. So hedging it before the shares are sold would be plausible. Hedging it after they've received the money for the shares, it's the opposite of what they would be doing, actually. So it makes no sense at all.
Now, Dave Kranzler, I'm going to make you wait on this one a second. I can see him like steaming. And I know you had an article on this one, so I'll let you steam there a little bit longer. Lawrence, welcome on in. And before I was being a little tricky today. I'll give you a little clue that I didn't tell the other people. Maybe this will help. But what if I showed you a page of the SLV prospectus here where directly from iShares says the trust does not hold or trade in commodity futures contracts. Does that help clear up what Jeff Curry just said? They are hedging by selling commodity future contracts, despite that the prospectus says the trust does not hold or trade in commodity futures contracts. And just to be fair, I mean, Jeff is Goldman Sachs with head of commodities, an authorized participant of the trust. So maybe he just, didn't know about it, but I can't figure it out.
It's simple. His lips are moving, therefore he's lying. I mean, we don't need to know any more about it. The guy's a bad guy, and this thing is a bad system, and it's all going to blow up on him. I mean, Bill's been saying this for years. He's dead ass right. And it probably pretty soon. I mean, I'm not a bullion bar expert, but everything I read on Twitter and elsewhere indicates that we're getting really close, guys.
We are.
Right? I mean, you guys know that better than I do, and you probably know.
May I suggest to our panel, is there anyone who, and I understand because we're balancing this as something that Bill's been watching for 40 years. Dave Kranzler, you 20 years, David Stein, probably 20 years for you, me 12. So there's that part of when something has been a certain way for so long. So, but that's why the mortgage bubble was the perfect example. And several of you were writing about that I was learning from when I got clobbered by it. So is there anyone that, with that said, and that, we don't know, and they're probably going to change the rules and fight to the death to cheat any way possible, but is there anyone who doesn't feel like something has already happened beneath the surface? Mr. Kranzler.
Can I try and win the silver?
Oh, please. Yeah. A re-raise.
The question is, what are they hedging? First of all, I just want to say, the primary reason why we're having this panel and having a discussion like this is attributable to Bill Murphy and Chris Powell at GATA, because they're the ones who got this whole, the Comex is a fraud and manipulation movement going. And I think late 1999, Bill?
Yeah, at the beginning of 1999.
Yeah, okay. And I signed up for, I registered for GATA, I think in late 2001. So, my hat's off to the effort you and Chris have done. It's been tireless.
You're here.
So, and also I'd like to point out that copy of the SLV Silver Trust, you got it from my blog post. I don't remember highlighting that, but I guess I did. They're not hedging anything because they're not shorting futures on the Comex. as the prospectus points out, they're not allowed to transact in Comex silver futures or any kind of derivatives like that. So they're not hedging anything. I had to re-listen to what Curry said like 4 or 5 times because I couldn't believe he said that.
Yeah.
I mean, it was just either he's completely incompetent as an analyst, or I don't know what his motive would be for making a statement like that, because it's easy enough to check. I mean, I pulled up the prospectus off the internet in 5 seconds because, I read through the SLV prospectus when it was first issued. I forget what year SLV came out, maybe 2006 or something. And same thing with GLD, and they are specifically forbidden from transacting in futures. And why would you want to hedge SLV anyway? People who are investing in SLV, although many of them think they're, which we know they're not, they're at least buying it because they want to index the price action of silver. And so that's why it's trust, although we don't know how long physical silver it really is, and it's probably not nearly long enough to represent the amount of shares outstanding. But so the answer is they're not hedging anything because they don't transact in futures.
Dave, that was a fantastic answer. You did not win the ounce of silver.
What the hell, man?
Well, I can actually, but actually, I can answer.
Can I try to? Let me throw my thoughts on the table for what it's worth. I'm wondering whether or not he's mistaking JP Morgan for the ETF. Sort of talking about 2 different things, which can be confused. But remember, the actual ETF is run by BlackRock. It's an iShares trust, and JP Morgan is the custodian. And there's a whole bunch of sort of big bank players that run this very large trust. But I guess if he meant that JP Morgan was shorting the shorting and the trust was buying, then that would satisfy the prospectus, who kind of explain what he said, although it still is wrong. But you know what I mean? That's just it, because just like Dave said, I've listened to that clip now many times, and it's kind of baffling to try and figure out what he means there.
Once they pay the money for the shares, the trust, the hedge would be unwound. The hedge is there before the money is paid. If I have an inventory, I hedge it. Once someone pays for it, I unwind the hedge. So once people buy the shares, there should be no hedge. Otherwise, you're just shorting the paid for shares. So you're shorting
the trust can't short anyway.
That's the point.
Yeah, it's
prospectus clearly states. And Dave Kranzler, you actually
non-starter.
You said, why would somebody, sell future? What would be the point of doing it? If the whole point is to get long exposure, why would you go and hedge it 1-to-1? And obviously the answer is so you can pay JP Morgan fees and have nothing. So right. That's the typical arrangement. Although, Dave, I do agree that 2 silver ounces, Silver Chris will throw into pot, 1 for Bill Murphy and 1 for his great partner, Chris Powell. And by the way, this is completely, I'm not pressuring anyone, but if anybody would like to support the fine things that Bill and Chris are doing there, I'm going to pull up the Gaddis site here. And there is a how to help link here. And you can go send silver or fiat notes, as James Anderson would call them. Bill, did you have to get running now?
In a few minutes, all of a sudden I'll disappear. I'll wait a bit longer. I didn't want to hear some of the other guys that I got to check out for Family Zone.
Okay, well then how about we give Rafi, I wouldn't, what kind of host could I call myself if you had to go without getting a chance to comment on Goldman Sachs economic hedging philosophy. So what do you say there, sir?
What do I say? It doesn't make any sense. What I just heard that, yeah, maybe he is confusing JP Morgan with the ETF and is just blurring terms. I mean, that's the only rational explanation I can think of aside from outright lying. I mean, he's looking to stop a rumor of a silver short squeeze, but a silver short squeeze is really just a dollar squeeze, and that is what is most dangerous for the dollar, and that's what has to be protected. So, I mean, I think Alistair McLeod put it this way. I mean, the SLV ETF and all these paper gold and silver ETFs, even if we have an honest one, for that really does deliver on physical, maybe for example, like OUNZ. I hear Merck's Trust does apparently deliver on physical. And you also have the AAAU, which was taken over by Goldman Sachs. And why would Goldman Sachs take over an entire ETF that delivers in physical from the Perth Mint? Because they don't want that, because that would be way too dangerous. So they have to shunt the actual demand for gold and silver into these paper funds, because it's much easier for people to buy gold and silver that way than it is to take delivery of it and all these premiums and worrying about theft and this and that. So to shunt away the actual demand for the metal into these paper products is part of what is keeping the price low. So by trying to shut off the rumors of a short squeeze by saying the ETFs are the ones that are short. So, what are you doing? There is no short squeeze. He's trying to save the entire Ponzi scheme, basically.
Yeah, and I was trying to be fair where, I guess, if you're on camera and the lights are going and people could be nervous. I mean, on one hand, he's been there doing it for years yet. I mean, if that was the only comment he said in there that didn't make sense, because Rafi, I know you're an analyst. I went to Wharton's MBA program, so I'm not qualified to look at numbers or make any sort of non-Keynesian judgment here. But let's take a listen to what he says about the size of the inflows. And if that's, it's like it's just a couple coins being tossed around, or
with the actual metal in real life, you're saying you don't think that that's a possibility?
I mean, you're talking 900 million ounces in the ETF versus a 25 billion ounce market. And by the way,
but those billion ounces don't move.
But the silver market,
they just
and
sit.
then you go on.
They just sit. Those other ounces just sit. They don't move.
Right, but you look at the flows going in and out of these ETFs, they're not that big.
And Rafi, that's the part that I think was what first caught my attention, because he says they're not that big. He said this February 4th. Here's January 29th, February 1st, and February 2nd. Now, I fell out of my couch when I saw this 20 burger back here, but let's put these small inflows into perspective, because you back out 1 year and you start seeing they biggest in a year, biggest in 2 years, biggest in 5 years, biggest in 10 years. Actually, if you go back 20 years, to the long term, if you get here, it looks like, I'm assuming this is when Warren Buffett was buying silver. Whatever happened in 1998, aside from that, these were the biggest in the history of the silver trusts. So, Rafi, do those seem worthwhile to you, or they just, he seemed to not be, not fazed by it?
Yeah, I think you showed that scene from Naked Gun when when Leslie Nielsen is like, nothing to see here, and the whole thing is exploding behind him. I mean, why would the SLV ETF change its prospectus by saying, there's a risk that we won't be able to back the shares with any further baskets with silver? Why would they come out with that a few days after he makes these comments about there's no inflows? I mean,
actually, Rafi the Wise, if I may be as bold as to correct you, sir.
Sorry.
They didn't come out a few days after he said it.
These
were the day before he went on TV and said it. He talks about how he doesn't see there's any possibility of a short squeeze. These changes were February 3rd. He went on TV February 4th. So when he was saying he didn't see any way there was a short squeeze, he said that a day after the trust that his bank is an authorized participant for says, to the extent that the aggregate short exposure exceeds the number of shares available for purchase. Let me read that again. To the extent that the aggregate short exposure exceeds the number of shares available for purchase, investors with short exposure may have to pay a premium to repurchase shares for delivery. And then he went on the next day and said that he didn't think there's a chance of a short squeeze by retail investors. Why didn't he mention these changes in the trust, Rafi?
Yeah, I wish that there could be some inkling of honesty in journalism where some, journalists are supposed to challenge the establishments, what they're supposed to do. So I would just love it if for just 1 second, the guy would challenge him and say, well, what about these disclosures that you just made? Or maybe they weren't available, but some kind of real challenge from these people would be very refreshing, but I don't expect it. It's only going to come from us. This is our job. And we just got to wake people up to it that see the fraud here.
Yeah, well, fortunately, we got Ronan the Destroyer on their case, and I would not mess with Ronan myself. I mean, it's just like I would assume that they can't know that Ronan has been like tracking this stuff yet, because it's like I know they don't face courtrooms and stuff, but Rafi, again, I'm not trying to pick on you today, but I got to make another correction, because you said, we'll leave Ronan aside, but you'd like some honesty. There actually was something honest here where they said price movements in the shares are not directly correlated to the price of silver. So I think that part we already knew. Bill, what do you think about that?
Oh, jeepers creepers. I mean, that says it all. I mean, that's the way it's been week after week, month after month.
And here we have another change slipped in the day before that appearance. The silver market in general has experienced extreme price and volume fluctuations that have often been unrelated or disproportionate to any of the factors that would make up the supply and demand. Dave, you any thoughts on that?
Yeah, I mean, why didn't they change that in 2011? Like Good point. At the end of the day, the price change, the volatility that we saw these guys are responding to, that was around the beginning of February, the basically the beginning of the silver squeeze movement. It went up $2 or $3, I think, which is not that much in percentage terms compared to some of the moves that we've seen in the past. So, I mean, this is, they just keep thinking of ways to, kind of CYA this prospectus, but, it's kind of ridiculous. If I can just kind of segue into something here, Chris, when I was on, I guess it was 3 weeks ago, we knew that there was going to be this big demand coming into the ETFs, because it's sort of the first place people are going to go if they want to buy silver really quickly and easily. And I said, that I expect that the silver ETFs now need to come out and basically, talk about how they're going to be, essentially they're going to be responding to the investors here. And now 3 weeks have passed, and we've seen the SLV basically do nothing other than update their prospectus. But they're not talking about, how great it is that there's people buying silver, and in fact, and they're seeing outflows now, right? On the other hand, you've got PSLV, which is the Sprott Physical Trust, and they're out there every day being very transparent. They're saying we bought this many ounces today. And I think it's great, and that's kind of that's the transparency that investors really want, and that's why you're seeing people switch from SLV to PSLV, and they've had tremendous inflows, and so one thing that I've noticed on social media that I want to mention is that. There's been over the course of this weekend this I guess PSLV challenge, and it'll be very interesting to see what happens tomorrow when the market opens, because there's a whole bunch of people on Twitter who follow silver, who follow the hashtag silver squeeze, who have been kind of challenging each other. If I get a certain number of followers, I'm going to buy this many shares per follower of PSLV, and I think the first guy I saw did it. I'm going to give him credit. Hopefully he's the original one. It was, I think, had the handle Terminator Trader. And I actually was flipping through Twitter right before our show started, and he posted that he was going to be buying $500,000 worth tomorrow. So, and then there's all these other people. If you just go onto Twitter and you search $PSLV and do the latest, you'll see all these other people. If you want to follow them, they're going to buy PSLV shares, and that's going to take physical silver off the market. So it's a very exciting thing that's going to happen tomorrow, Monday morning, and let's see what happens.
Yeah, and David, in there, you mentioned when the market opens. I can't believe I almost let
It's
this
open.
slip, but the market is open. And it looks like maybe Goldman Sachs has been watching the show and realized they've been hedging in the wrong direction all these years, and they're trying to unwind it right now. But we see up 22 cents. And Lawrence, what do you think about what David just mentioned with the PSLV?
Oh, it's a thing of beauty. I mean, they're the real deal, and I trust Eric Sprott and I trust his organization that they're going to source that silver. The earlier comment from Curry about 25 billion ounces. So what the fuck is he talking about? I mean, they're 900 million ounces and they get absorbed and used. I mean, the reason silver is so vulnerable, compared to gold is, and gold's vulnerable to being squeezed as well, is that they basically it gets used up. I mean, it's not like there's a big silver inventory laying around we can go grab, right? 900 million ounces mined a year, and half of that easily gets absorbed into solar and electrical uses, cars, etc. And the other half is investment demand and jewelry. Not much of that anymore, but still goes there. It used to be some photography. I mean, it's nuts. The guy's an idiot. I mean, he's a complete idiot. I mean, Bill will remember this. I mean, I don't know if Bill's still on. I think he might have dropped off, but he was the guy. I mean, this is the guy who let the cat out of the bag that there were 100 paper claims for every one claim, in the gold market.
That was his twin, Jeff Christian.
Oh,
Jeff
was
Christian.
it? Oh, you're right. I'm getting them mixed up.
There is a similarity, it appears.
Yeah, and I was going to say, this guy doesn't look like Jeff Christian. He looks different. Yeah.
They were at Goldman Sachs at the same time when Goldman Sachs acquired Jay Aaron, because that's where Christian was. So they know each other and they're
Thank
friends.
you. Yeah.
So
My bad. I was
Lawrence, in
confusing
case that's just a firm-wide hedging policy they've invented, then it could make sense if they both do that.
Yeah. I mean, look, we've got these guys on the run, and we're not going to back down, right? They're screwed. They're completely screwed, and all we got to wait is for it to play out. More and more people are waking up, and we're going to win. And it's long overdue.
Well, what would hasten the process is if that take delivery on the Comex of silver. Now they're incentivized to leave that silver in the Comex vaults because the Comex cut its safekeeping fees. It's less expensive to keep your gold and silver in a Comex vault than it is in a private a private vault. Most of them are in Delaware. There's a few sprinkled around the country. And also there's also fees associated when you want to load out your silver that you take delivery of. There's extra fees involved with that. When we did it, they made us use a Brinks truck. We wanted to use a FedEx truck because it was cheaper. They make you use a Brinks truck. So there's other expenses associated with that. However, if just half of the entities that stand for delivery and have title to silver in the Comex vaults, if they would just remove those bars from the Comex vaults and move them to a private depository somewhere, I think you'd create just one vicious hell of a squeeze. I mean, that's essentially what the Hunt brothers did, because they had figured out there was more paper silver out there than physical silver, and they started to move to take delivery of it and get it out of the Comex. It was basically a giant arbitrage. They weren't trying to corner the market per se. They were just saying, and it was the same thing de Gaulle did in the 60s with the gold pool and with at the time, foreign investors had the ability to exchange treasury certificates for gold at the Fed. That was per Bretton Woods. So if the hedge funds or the other reportables on the COT report, if they would stand for delivery take delivery of the bars, and then move the bars out of the Comex, I think you'd see silver shoot for the moon.
Dave, you know that's complete conspiracy theory, buddy.
What?
Complete conspiracy theory. In fact, how are you going to try and tell me there's a short squeeze when you just heard the most prestigious banks in the globe explain there's not even a short position? And I don't really know how you're going to convince me there's a short position. I don't know. I mean, unless maybe in one of the amendment changes to the SIVR trust, you had a clause that said large banks with substantial short exposures to silver. So is this confirming that, Andy, I know, in fact, both of you guys, I saw you're in this book called The Big Silver Short, talking about all these short positions and aliens and stuff that, you know, obviously the banks that know things, even though they can't spot subprime as it's unfolding. Dave, by the way, you could have given Bernanke a copy of your short sellers journal back in 2007. It would have been a service to the country. But Andy, I'm confused. I thought I was just nuts and, you know, making conspiracies up, but it looks like they're put it in the prospectus, which is unusual. Any thoughts on that?
I don't think you're crazy at all, Chris. It's and that's really the difference right now, is that there's an acknowledgement by people who've never even bought silver from me, but people that I talk to who will talk about a silver squeeze. There's actually people out there, even who have no interest whatsoever in product, who continually bring up to me, or first-time clients who I've been talking to for the last 3 weeks. The discussion almost always starts with, do you have any silver left? I understand there's none left anywhere to be found. So the whole awakening and the concept of a short squeeze, starting from the very top, which we've been talking about forever, all the way down to where I am, where I can't even get a 1,000-ounce bar, even one or two of them, until March. And now we'll sell retail north of $1 over the price of silver. That's normally would have been 25 cents over, and you can get as many as you want, literally as many as you want within 24 hours. When you talk about not being able to get 1,000-ounce bars retail and have to pay north of $1 premium, when I tell you I've never seen that before, I would have told you I've never dreamed of seeing something like that before. So there most definitely is the makings of, anyway, a short squeeze, starting at the very top, working all the way down into the 1-ounce coins that are becoming harder and harder to get on this side of the table. Very true.
And Andy, Eric Hoffner in the chat says, can you ask Andy about the weekend silver buys? And I'll tack on to that anything on the 1,000-ounce bars, what you're hearing there.
Yeah, the weekend is like the week. Our phones ring nonstop. I get 200, 300, 400 emails a day, every day, people wanting to buy over the weekend. And in particular, this weekend has been really crazy, as there's talk of the 24th being the beginning of the delivery month. And so there's a lot of people talking about that. A lot of people really concerned about that and buying. I had someone ask me yesterday on 1,000-ounce bars. I asked yesterday and was told, once again, not available until March. And that's just unheard of, really. That's just.
And excuse me, Andy, can you also, I guess one thing I wish I had done when we first reported that, can you say the number of days that you're told it would take now and how many days you would have taken 3 months ago?
Well, at the time when I asked this originally, about a week ago, I was told 4 weeks, which is just crazy. When I asked, and this is from a Comex depository refiner, top of the food chain, 4 weeks, I was told they couldn't get trucks at first, which I kind of chuckled at. When I asked the other day, same thing. The answer was not until March, nothing more specific. Before, I would have been able to say to you, I will have them drop shipped within 24 hours to any depository you want in the United States or to your home. It wouldn't have been a problem. I could have called any of the largest distributors in the industry, and they have them. They're choking on them. Right now, they're gone completely and totally. And if you look at it from that being the top of the food chain, and all of a sudden they're gone, and realize it's getting harder and harder to get coins, everything, and gold too. I mean, it's quietly starting to get harder and harder and harder to get. But the one thing that you could always say that, well, if everything disappears, we can always sell 1,000-ounce bars. That's a no-no. They're gone.
Dave Kranzler, go ahead.
So I have a question, Andy. I mean, I pulled up the latest Comex warehouse stock report for silver, which obviously is updated every day. Now, let me just qualify this by pointing out that these reports are prepared by the banks themselves, and I particularly don't trust them. None of them, the commitment of traders, the daily open interest report, or the inventory report. I think they're to some degree probably representative of what's going on, but I don't think they're accurate. So as of, and I think this would have been as of Thursday, maybe Friday, they were showing 145 million silver ounces in the registered category in Comex vaults. Now, registered means technically available for delivery.
Yep.
So
So the answer to that is one word: rehypothecation. And they're scared shitless that there'll be a run, a squeeze. So the idea is that if everyone who actually owns a contract, like the Hunt brothers realized in 1980, if everyone who owns a contract tries to redeem the contract for delivery, there are far more contracts than there are bars. The rehypothecation of those bars has never been an issue because the Comex was never a delivery mechanism until now, until 2020, when we kept seeing this others reportable group stand for delivery. And now with the open interest being so massive and the continual discussion of short squeeze delivery, they're scared. I think they're scared, and they don't want to let anything go for fear of redemption and what that will mean if they don't have the bars to deliver and go to a cash settlement. So the reason I think I was told that I can't get them until March is not because they don't have them. It's because they're afraid of a short squeeze on bars that have already been committed to 3, 4, 5, 10, 20, 100 times over through rehypothecation on paper.
right. Well, it'd be interesting because, I mean, you were talking, you mentioned it was a refiner of bars that are made available to the Comex. You ought to just go and buy a contract. You have to do a 5,000 ounce minimum or one contract to take delivery now, because you have buyers of these on the other side. You ought to just try it with one contract, take delivery, and see how long it takes to get the bars.
Chris and I were talking about that.
Yeah, that's what I would like to see happen.
I'd be more than happy to do that test. I can actually make a phone call tomorrow, and next time we reconvene, I'll let you know what I was told and how long we have to wait. I'll even front them the money and say, here we go, we'd like to do that. So yeah, that's not a bad idea.
Andy,
the other thing that was interesting was that the open interest as of, let's see, this is preliminary as of Friday, so, and it'll get revised a little bit, but there's, let's just call it rounded up to 60,000 contracts of March silver open, and first notice is officially Thursday, but notices can go out as early as Wednesday night. And we'll see that bleed down to some extent. But let's just say even if it's down to 20,000 contracts by the time first notice starts, you're talking about 100 million ounces of silver that the holders of those contracts are potentially going to stand for delivery for. So it really, I don't know if Rafi's still here. He pointed it out that the first notice starts next week. It could get very interesting next week.
Can you let folks know which specific day? I believe is Wednesday, that first notice day?
Wednesday after, the way it works is Wednesday after the Globex computer session goes dark, which is around, I think it's right around 3 p.m. Mountain Time where I live. Right as soon as that's done, they can you can be noticed for delivery, and that's where the contract. Pardon me.
That's where the majority of this others. That's where they trade on the Globex. So this is where the big sovereign wealth funds and the family offices are shadowing, hiding in the corners, and standing for delivery.
That's right.
Andy, another thing I thought was interesting the day that we talked about that was from none of the 4 places that I called, and I said, what if I'm willing to pay, if I had a customer who's willing to pay a big premium? Not one of them said, well, you want to pay 50% or 100%, they don't get it for you, but it was just no. And again, you mentioned that this is with a dealer that has a Comex account. They're set up. It's not like someone's trying to set it up and hey, do I call TD Ameritrade or how do I do it? mean, these guys are doing it every day. So essentially they turned away free money if the Comex can really get delivery. Have you heard of any other explanation? I mean, I'm trying to understand why that would be. I haven't been able to get an answer about that yet.
Well, that's my
It's
point. I
like
was
people are
told that.
turning down free money on Wall Street right now unless you
Oh yeah, no,
just
that's
can't
the
get
way
it.
the game works this way. If you order it, you lock it and you pay for it. And these groups are usually good for their word. I mean, they're huge companies. They'll pay or they'll deliver at some point, but his explanation was no trucks available, can't get it out to you for 4 weeks minimum. It puts it into March, that puts it past the delivery issue. It didn't make sense to me. This is a Comex depository. This is a group that has unlimited 1,000-ounce bars, 9.5 times out of 10, 9.9 times out of 10. I just called on the 1/10 of 1% time when they can't do it. First time in 31 years anyone's ever told me they couldn't get me as many 1,000-ounce bars as I want immediately, ever.
Why can't they just ship them FedEx 2-day insured?
Well, that's the point. So I don't think I'm being told the truth. And that's why it is my
Yeah,
belief.
you're not.
Again, it is only my belief that they are bracing and for the potential of a run. You know, there were 300 million ounces plus taken off of Comex last year, and that was huge amount. And now as you're mentioning, Dave, the potential to take a third of that off in one delivery month or more I think it's got them scared. For the first time, there's a light shown upon the possibility of this happening. And they've been able to do this manipulation and play the game without ever having to worry about the consequences of naked shorting, because no one ever stood for delivery until last year. And now we see that maybe exacerbating with 8 million Reddit people who have alerted the rest of the public that, hey, this is real. And I think they're scared for the first time ever.
Yeah, and Andy, I'll add something to that where I have started to hear from people who are taking delivery. There's for a week or so, I've heard from another YouTuber that he's been hearing from people. I've started getting messages. Some are just discussing it or wondering. And then the last couple of days, I've gotten messages of people that are actually planning to put large amounts. And again, I'm thinking, well, I'm sure if I'm hearing some people, I'm sure there's other people out there that aren't telling me about it. So it's interesting. And that's kind of the nature of a short squeeze. It's like like a volcano. It's dormant, but then it goes off. And again, it just seems like, I don't know, maybe they don't even have to successfully take delivery, but if you see this demand and you see people are willing to pay a premium, it's kind of like last year where eventually it just for a while was like, all right, the price of silver it's not spot plus this, it's whatever you can get it for. And if the Comex stiff arms people or changes the rules, yeah, I think you could get away with that 1980 when no one was looking, we didn't have the internet. But I think if the Comex changes the rules and because they don't want to meet the delivery, I think that's going to blow up in their face.
Well, they will. I mean, they'll do what they did to the hunts. They'll raise margin requirements first and foremost. Of course, they'll change the rules by saying that you just can't go long, and then they'll cash settle. They'll do all they can to avoid the short squeeze. But when these actions happen, it just makes the price setting mechanism a farce. And so the law of unintended consequences comes into play. They're caught in a pickle for the first time. They really are, because all of these things that we talked about, we were speaking to a thimble size of, group of people. And now all of a sudden it's expanded into, I hear it all over the place. Even when people aren't talking to me about buying anything, they talk to me about Reddit, short squeeze and silver, what's going on. I read it in the newspaper, etc. It has attention directed at it that we've never seen before. And I think that's really the main difference.
David, what would you add to that from your perspective where you're seeing it from the mining side?
Well, look, I mean, the interesting thing about the mining side is that we can't, control the production in the short term. It takes a very, very long time to change, to either expand a mine or to build a new mine. You're talking years in most cases. So, it's the miners are not going to be coming to the rescue of Comex. Let's put it that way. There's some production that's happening every day, every week. That's been happening before. It happened before February. It's happening now, but it's not going to change dramatically. So if more people are buying silver, then we're going to go through it really quickly.
Lawrence, given everything that we've talked about and all these factors that are building, how can we be wrong? What can we be missing? What are the risks? What is out there that, it seems like a lot of factors building, but what are the blind spots? What can we watch out for? How could it go wrong?
Yeah, I suppose the federal government could say they're going to, cut spending, means test Social Security, cut the Defense Department in half, and shut down all the MMT stuff they're doing. And, we'd be in a hard place, right? I mean, the dollar would soar, the economy would collapse, and, our stuff would be great because it doesn't have counterparty risk, but it would be, it'd probably be lower price as we, plummeted into a depression for a while. I mean, that's the only thing I can see. I think the odds of that are about zero. I do think they're going to probably declare a force majeure here at some point, and settle this thing with paper, which isn't going to solve the problem. It's only going to make it worse.
For sure.
I think we're on the launch pad, frankly, for all these things. I mean, I think the next wave up will take gold through the 2080. It'll take silver through the 35. And these things are going to look like the Bitcoin chart. We led Bitcoin. Now Bitcoin's leading us. I mean, Bitcoin's doing what it's doing because it smells the monetary debasement and it's not as manipulated as this market. And so, all these things are going to catch up. I mean, I've always said the issue here is there's 400 trillion of fiat shit, debt, bonds, equities, etc., cash, and there's 4 trillion of our stuff, that 400, once Gresham's law really kicks in and that 400 says, holy shit, what I hold is worthless, I got to get some of that other stuff. Our stuff's just going to do a moonshot. I mean, people are going to be stunned, absolutely stunned in my view at the prices of these things. I mean, silver could be $100 by the end of this year. Gold could be $3,000. I mean, I think that's what's going to happen. But until it happens, I could be wrong, and maybe I will be wrong. But it's like a beach ball that's been held underwater. I think Bill used to use that a lot as an analogy.
Just to back what Lawrence is saying real quick, getting gold is, we talk about silver on this channel mostly, but getting gold is next to, I shouldn't say, it's very difficult. The US and the Canadian Mint are all but who knows how long backordered on Eagles, Buffaloes, and Maple Leafs. Here again, this is right on par with getting 1,000-ounce bars. 2 months into the new year, if I can't get you $5 million worth of gold Eagles or Buffaloes like that, that's never happened. So it's expanding. Platinum is really difficult to get too. So, we're really close to a major problem in getting physical product in both silver and gold and platinum for that matter. What we have taken for granted for a very long time, is now making me considerably concerned and nervous because I can't get you gold Buffaloes right now at any cost. I just can't. The U.S. Mint has given no guidance on it. Maple Leafs are way out into March, supposedly, gold. Premiums are way high. Premiums on gold Eagles at 10%. I mean, these are things that are just unheard of. So silver, yes, gold also. It's beginning to spread throughout the entire precious metal complex.
One has to wonder, and I've been asking this question now ever since the Mint said that they're putting their production on allocation. The way a market's supposed to work is if there's more demand than supply, then you raise the price, especially if you're a supplier, to the point where you balance out supply and demand. So, and we see, the coin dealers are selling silver if they have it at, I don't know what the premium is today. I know it's been as high as what, $9 or $10 over spot
on silver Eagles. Yes.
Yeah. And so I don't understand why the Mint wouldn't just go out and say, okay, to the refiners out there, offer wanted in competition, or, show me where you can get me enough silver blanks delivered so that we can produce enough silver to meet demand. That's how markets are supposed to work.
Not only that, it's actually written into the bylaws of the Mint's charter, which
Yeah,
is
you're
that
right about that. I forgot
they
about
are
that.
supposed to supply as much in the form of gold eagles and silver eagles to
That's
the
right.
public as is demanded. And they are the model of inefficiency. I'm one of only 27 US Mint resellers in the world. And I'll tell you, it's never been like this. Typically, we see this problem in November, October, November. To see it the second week, it actually started the second week in January and really has accentuated here into the end of February. It's unprecedented, and even more so is the lack of information coming out. That they're just really, when are we getting the allocations? We don't know. We'll let you know next week when the allocations come out what you're getting, and it's always a marginalized amount. And whatever the reason is, they are certainly inefficient in handling the amount of demand that there is, and have done a woeful job. Last I looked, there was just about 7.5 million silver eagles made this year. They could have made 10 times that easily to suffice demand, and they're just not.
I think you're being kind by putting some lipstick on the pig there, because the Mint could get this ball rolling by saying, okay, just send notice out to refiners. We'll pay, silver's trading at 27.45 now. We'll pay $32 for all the blanks you can provide us. And then the refiners could turn around and tell the mining companies, hey, we can raise what we're going to pay you for your silver. And that
last year they did that. They raised it by 50 cents. And, I think there has something to do with what they're allowed to purchase, but they actually did raise it by 50 cents. It's the primary distributors who are doing exactly what you're saying. The 4 or 5 or 6 major distributors who take the big allocations, they're the ones raising the premium to meet demand, because they have no idea when they're getting allocations, and they have demand not just in North America. There's demand for silver eagles all around the globe, and gold products all around the globe. And so they raise the premiums, and then all of us people one step underneath them gobble everything they have up, sell it to the public, and then what? And getting more is even more and more difficult. So it's a deal where at this point, basically the cheapest silver you'll find anywhere in the industry right now is $5 over spot. That's going to be pretty darn close to the cheapest. So that you're basically getting, confirmation that silver is not 27, it's actually 32 and change, should be higher. And if you realize that 5 is the bottom of the barrel, it's more like 6 or 7. Silver should be north of 32, $33 right now. That's the real price. And so what is something worth? If it says it on paper, but no one is willing to sell it at that price, that's where we start to realize that what's going on Comex and price discovery, it's broken. And so that's really, I think, what the entire industry is saying right now. And it's rising. It's not getting any easier to get. My 2 cents would be that those premiums to continue to rise to find that equilibrium, which we're not there yet.
Well, Andy, I appreciate that. And before we have one last question before any parting thoughts, although before we do that, I'm going to welcome onto the stage Yara Vinay, who is the other half of running our Arcadia economic production and silvery ESPN of the metals world, is at least what we're aiming for. So Yara, who many of you have seen or met already, is going to come on because, as you know, last month we had the drawing for this 10-ounce silver bullet. And I might add, you're not just getting one from the factory. This has been sitting on my desk. And actually, before Yara gives away the winner, I might add that there's a little bit of a personal story behind this one. Andy, a lot of the things that you and I have talked about, actually had a very good friend named Steve Cook, who was up in Alaska, and he opened a We Buy Gold shop. And I didn't want to go to Alaska. I mean, we talked about it. We were doing a lot in setting it up, and then he did his thing up there. And when my dad passed away and left me some money, I bought some silver from Steve, including this bullet. And it's a little bit special because Steve passed away a couple of years ago, but he would have loved being a part of this. And I feel like he'd be proud of what's happening, not just the panelists here, but this is the whole community, which is really incredible. So, Steve, we're going to be passing away your bullet tonight. Yara, do you have a winner for us for a new home to get this 10-ounce silver bullet to at this particular point in time?
I sure do, Chris. The brand new owner of Steve's Silver Bullet is Neil Stringer. Congratulations, Neil.
Right, Neil. Well, everybody in the chat room, let's give a big hand to Neil. Congratulations.
Neil, if you're not in the chat, you'll be getting an email from me soon, but hopefully you're live with us today.
All right. So, and if you can email your address to Arcadia at Miles Franklin, make that a little easier for Yara. And Yara, I see you have some hashtag got silver gear there, huh?
I do. And everyone else can get their Got Silver gear as well from the Teespring store right below our video on YouTube or from our shop page on the Arcadia Economics website. So if you want to rep with the Got Silver with me, you can do that easily.
Yard, do we have an update on the Dave Kranzler silver t-shirt? I mean, I'm not trying to complain here, but I mean, I'm trying to cover silver and left and right. It's like, we're going to get a Dave silver figurine or action set. Do we have an update on when the Kranzler shirt is going to be available?
Dave, I'll get with you on the Kranzler shirt right after this because I can make those.
How about if we pass on this idea?
The Ben Bernanke.
Dave, are you wearing your leggings right now?
No, I'm waiting for you to produce a jock strap.
Okay, well, I'm sure there's someone who can make a silver tennis racket for us. So,
Well, as a matter of fact, I do have this.
Ooh,
well, there you go.
nice.
Well, and Yara, actually, as people have known, they've been hearing me talk about how sometimes you choose your destiny, sometimes your destiny chooses you, and it took almost 4 decades to realize that my purpose on this planet was to bring. Oh, actually, I'll show you because I had this little bugger. Steve Cook also gave me this one. And I was thinking, how cool would it be if you had Ben Bernanke in a figurine like this in his helicopter shooting $100 bills all over your desk as a paperweight? And I know you've tracked down someone who can actually build us the most important thing everybody on the planet really needs right now. I think that's clearly without question. Where do we stand on that?
Well, one of our awesome viewers is sent me the rough draft 3D version of Silver Chopper Ben. So I think we are closer than we've ever been. I don't have a ETA specifically yet, but we are well on our way. And Ben is already doling out all of the fiats as we speak. So that is on its way to us.
And of course, I should mention that if we do have any bobblehead experts, I want to make a bobblehead version that spits.
We have a
cash on
bobblehead
your
expert
desk.
too.
Ah, I'm blessed. I'm the luckiest man on the face of the earth.
Yes.
I beat Lou Gehrig today with all due respect. So thank you, Yar. Yar, would you like to stick around and take our final question and then wrap up?
I would love to.
Maybe we have one more Jeff Curry question. Now, again, it actually has gone through my head. Maybe I'm insane. Don't answer that. But it's like I really do try and be positive and not pick fights and, focus on negative energy. And it's like almost like there's part of me that like feels bad on beating up on Goldman Sachs and JP Morgan, but to the degree that they're still doing stuff that I think is flat out illegal, will continue. So Yara, maybe you can take first crack at this one, but here was the last thing that Jeff said that I found interesting. So let's take it here and hear the end of his clip.
I guess my question is, forget the ETF. In terms of thinking about how you're going to create a squeeze, the shorts are the ETFs. The ETFs buy the physical, they turn around and they sell on the Comex to be able to hedge that physical position like any other corporate. It's
Right.
not a naked short like in an equity. But here's the main reason why I don't think it's possible to squeeze one of these markets like what the Hunt brothers did in 1980. You got position limits in these markets. And they've gotten tighter and tighter. There's 7.5 million ounces right now.
Man.
Which means that if you were to squeeze it, you would have to divvy up the position to get the inventory off the exchange 50
Now, Dave, we'll let you get a crack at his math he gives here.
times, which each position worth $217 million, and then do it in a coordinated fashion.
I would pay several ounces of silver to hear his calculations there, but we'll stay focused because here, interestingly, there was an announcement January 28th, raising the position limits, unusual timing. And we see gold futures, 6,000 contracts is the allowed. And then the great Craig Hemke of TF Metals points out here's January 20, actually the day they raised the limit. And there's Goldman Sachs at 8,900 contracts. So Yara, do you think the position limits are working? I have a feeling Dave Kranzler has a comment on this one, but you go first, Yara.
Well, from everybody that I follow on Twitter, including you, I would say that all of this is a farce and that everybody is saying what they want to and then doing what they actually do behind the scenes.
Dave, I know you need to be an advanced lawyer to actually read, and there's always disqualifications. And am I missing something, or did they not go over the limit on the day the limit was? I guess they didn't even change the gold one, I don't think, because gold was 6,000 before and stayed 6,000. Is that correct?
Didn't I just hear Curry say that they've been tightening the position limits? I thought that's what I heard him say. Now, we're talking about the guy who's the head of global commodity research at Goldman Sachs. So, I mean, you can't be a moron and get that job. So that tells me somehow he doesn't know what he's talking about, which I find inconceivable, or he's just, spewing out bullshit to try and misdirect and deflect. I mean, but getting back to, the position, it doesn't really matter what the position limits are. I mean, JP Morgan is always over the position limits in silver. Goldman's way over the position limits in gold. The position limits only work if the CFTC is willing to enforce the rules. And they're not. They don't. They look the other way. They've been looking the other way for the 20 years that I've been doing this. So, it's like, don't even bother talking about position limits.
Dave, a lot of conspiracy theories in there.
There's not conspiracy theory. There's conspiracy fact.
Dave,
you just saw the number
commodities
that Craig pointed out.
expert. Don't you see that in the title? Commodities expert. That's a
He's the
qualification.
head of
That's as
global
ironclad
commodity
as the
research at
world's
Goldman
greatest
Sachs.
grandpa t-shirt. Although you mentioned the CFTC that I'm sure is on that. Speaking of the CFTC, this, you're probably wondering, why am I pulling up Climate Finance Summit? Maybe the reason the CFTC, missed that Jeff Curry's interview or the spoofing that happens every day is because there you see the acting CFTC trading commissioner future. They're not even looking at silver. They're busy with climate change and the important issues that are mandated in their legal documents, doing it all around the globe. And here, perhaps folks at home, if you want to contact Rostin Benham and ask if he has any issues, or maybe he knows what Jeff Curry is hedging, because I guess my parting thought, I'll go first here. At least actually, Larry Fink's going to be there. Maybe they'll talk. They got some JP Morgan here. Do we have Goldman coming in on this panel too? We have some House of Representatives. So maybe they're going to straighten this out and get us some answers. But I guess just my parting thought, I understand the frustration people have of saying, the CFTC or the government does this or the SEC does that. But I think the way that you get people to act is stop looking at a nameless, faceless agency. And here, now the person, Rostin Benham, however you pronounce that. But I mean, if you guys see the evidence and you're wondering why, I would contact these people, get it on the record so that, hey, you're seeing none of us are perfect, but we're explaining why we think it's going to go bad and now at least, rather than the CFTC being the one who failed, if there's a clear record, and fortunately my legal team is really having fun doing that, and we're going to have instructions later this week of how people can get involved. I would ask not to send me emails now. We will make a way to do that. In fact, we're doing a lot of stuff. So unless something is really important, please, if it is important, send it. But we're going to figure out how people can do that in an organized, efficient manner. So I think that's how you get people to start moving. And anyway, with that said, parting thoughts, David Stein.
Sure. My dog's barking, but I wanted to go back to what Dave and I think Andy mentioned earlier about Comex and the kind of the rock and the hard place in terms of, not wanting people to take delivery, but yet, obviously there is a lot of demand to take delivery. And, let's not forget that Comex, they're a much bigger organization than just the silver futures. And they have, all these other products that they run the futures markets for. And if they kind of have to default on little old silver, it's a huge black eye for the whole organization. So they're going to do whatever they can to keep that from happening, and keep buying silver.
Well, thank you, David. And can you let folks know a little bit about Kuya Silver and what you're doing there, and if that's a place where they can get leverage on the move, depending on how things play out?
Sure. Yeah, we're a company that's developing, actually restarting a mine, an existing silver mine in Peru. So right now our silver is safely locked underground, and we don't want to sell it at $25 or $27 an ounce. But we are basically putting the wheels in motion, permitting and all that to have it into production by early next year. And hopefully we'll be selling our silver at a much higher price at that point.
All right. Well, I appreciate that, David, and thank you for being here. Mr. Schectman, parting thoughts.
You're on mute.
Andy?
On mute.
Sorry about that. Yeah, you were talking about when you're ready, all of us sending you an email or signing up on ways that we can help. I think the Reddit group proved that a coordinated effort by people who are really trying to affect change, it works, and I think it will work as more people jump on the bandwagon and do what they can, as little as it is, whether it be reaching out to the CFTC or taking physical delivery of a contract or whatever it is. I think it's having certainly a profound effect, and it's good to be here and help spread the word. Chris, you're doing an amazing job, so thanks for having me on tonight. I appreciate it.
Andy, well, I have a quick question for you. If I just sit here and, not to be rude to Dave Kranzler, but if I just retweet some of these, would that help spread the word? All these people are participating in the PSLV challenge. I don't want to be rude, but should I just sit here and you think click some of these while we're doing it?
Absolutely. In the world of paper,
41 retweets
silver,
on that one. Looks like the word's getting out.
In the world of paper silver, there is no better than PSLV and Eric Sprott and the whole Sprott organization. To me, is a name associated with integrity. And so for anyone who's going to try to do this, stay far away from SLV, and certainly Eric Sprott is a champion for this entire industry. And I don't think you have to worry about anything improper happening with that account. So with that fund. So yeah, it's fantastic. And all of the tweeting and the videos and it's all helping. It's all working based upon the feedback that I get every day. I'm telling you, it's working. We talk to more new people every day who have never bought gold or silver until they've stumbled across your video or some of the others in the industry, and they're doing it now because I think it's very logical. Once you understand and hear the truth, hear the story, it makes a great deal of sense. Like David was saying, little old silver. Well, of all the commodities on the exchange, I don't know of another on all of them that the Comex trades that have as large of a concentrated position. 50% of all of the silver open interest is controlled by the 4 or 5 or however many of the commercial banks that are doing this. So you have a massive concentrated position in little old silver, which I think probably has a much bigger ramification than the CFTC and that the Comex would like to admit.
Yes, but climate warming is under control. So fortunately, we can all rejoice in that. Lawrence, parting thoughts. What do we watch out for this week? What are you expecting?
Buckle up. It's going to be great. First of all, Chris, thanks for doing this. It's really outstanding. Appreciate you including me.
Thank you for being here.
I'd also like to say that my fund owns Koya. It's a core holding. It's a great situation. Quentin Hennig's involved, and so is Eric Sprott. So that's one of my favorite names. And I just say buckle up. I mean, I think it's been a rough 6 months here as all these things have corrected. But the sentiment's incredibly bleak, as it always is right before it takes off again. And I think we've got very, very bright days ahead. It's going to be the next 3 months are going to be a lot of fun. So everyone who's in the space and is hurting, I just say relax. I've been doing this for 12 years. I mean, it's so standard, and I mean, we're gonna rip through the next couple of levels of resistance. It's gonna be fun. So
yeah, my option book is sure hoping so. And which
Right.
again, I was thinking about this earlier today. And to be clear, this is not anyway financial advice. I'm an analyst, not a planner, but just in disclosure, last couple of weeks, I've even been selling shares to convert them to options. And I've been shortening my maturities, which, to be clear, is a very aggressive bet that is not appropriate for most people, but just to the degree that I've always never claimed to get everything right, but to be transparent in what I'm doing, and that any of these things I'm saying, that's what I'm putting my money behind. To factor in at the same time, I'm also willing to take the risks of that and keep rolling it over, which obviously is different, but I'm just saying that to put that in context of my feelings along the lines of what Lawrence said. So, Mr. Kranzler, I appreciate you being so patient. I know you probably sitting there, you can't wait to get JP Morgan's latest silver report and find out what to do. Your investors are calling, trying to send money. And you just can't say yes until you know what the prestigious banks are doing. So how are you going to handle that for the rest of the night?
I mean, I'm gonna watch the Nuggets game tonight. To be honest, I have to cook dinner also. So,
what are we cooking? We got the grill going. It's a little hot tub, date night. What's going on at the Kranzler crib?
Some beef tenderloin, beef stroganoff.
Wow, and we still got about 5,000 people watching. Can they all head on over to your house? Dinner with Dave?
Fortunately, not. I only bought 1.5 pounds of the tenderloin, but
what if JP Morgan rehypothecates that tenderloin?
Yeah, but I have possession of it. That's the key. And I guess this sort of ties into what my parting thoughts would be. And that is, to everyone listening out there, we're not going to create a short squeeze in this market by buying shares of SLV. It'll help if you buy PSLV. The best way to do it, and unless you have enough money to buy enough shares to take delivery of the bars that PSLV has, which they're the most bona fide one in terms of doing that. You're not removing silver from the market. So for me, the thing to do is take as much money as you want to invest in silver and call up Miles Franklin and put it in order, even if it's, we'll notify you when it's available, because then it allows dealers like Miles Franklin to go to the distributors, the wholesale distributors, and say, look, I can pay a lot more for silver. Why don't you communicate that to the Comex? Tell them to raise their goddamn price. If you have enough money, I think I just calculated at $28 an ounce. A big contract on the Comex it would cost you about $140,000 to take delivery of 5 1,000 ounce bars. Get together with a group of people, form an LLC, and go onto the Comex and put together 5 mini contracts, and then you can convert that. You can take delivery of that because it's the 5 bar minimum. But the key is, and Larry referred to Gresham's law. What we're starting to see here is Gresham's law in operation, which is, bad money chases out good. People around the world are converting their fiat currencies into physical gold and silver. And that gold and silver is disappearing from the market. We saw that happen in gold in March. And now we're seeing the same thing happen in silver now. So, you know what? Buy as much physical silver and gold as you can, but take delivery of it, take possession of it. Don't worry about safekeeping it. You know, I mean, you can have, $500,000 worth of gold doesn't take up very much space, in the carpeting or the wood panel in your closet. So that's my parting advice, or my parting words.
Really good words there, Dave.
Well, I'll just say I'm darn grateful the U.S. markets were closed, because I would have bet the farm that Dave's parting advice was that kids don't invest in tenderloin ETFs. It's not the same as having something. So got bailed out on that one. Sometimes better to be lucky than wise. Yara, before you have any parting thoughts, it looks like there are suitors asking for a date with Yara in the chat room.
Yeah,
So,
baby.
I guess when you're
Go
the
big or go
silver
home.
queen on Twitter, that's the kind of thing that happens.
Thank you.
Any parting thoughts and any announcements? Anything I forgot to mention tonight that we should let folks know?
I'd like to give some shout outs before some announcements. So first shout out I'd love to give is to Andy and Miles Franklin, because I am personally privy to only a percentage of the incoming inquiries and people wanting to buy silver. And it's been just nonstop for weeks. And you guys have done an amazing job. And I'm getting awesome, feedback from people that I haven't been able to personally help. And I know what you guys are going through. And so I want to just give a huge shout out to you personally, but also to your whole team, because you guys are really crushing it. And I've heard some stories, from people who have bought from online dealerships and aren't getting the kind of communication that, I know that is how we operate at Miles Franklin. So I just want to give a huge shout out to Miles Franklin and mostly to Andy Schectman. Thank you for all of your insight and all of the education that you give to people, as well as just being a really reliable and wonderful business to do business with. So
You are
that's
a
my
sweetheart.
first shout out.
We got your
Second
back, and thank you.
Oh, thanks, Andy. Second shout out is to Wall Street Silver. I am so impressed. I have goosebumps by all of your energy, your enthusiasm, your willingness to dive into this very, transparent yet complicated situation, the ways that you're making memes, keep the memes coming. That's what my hugest shout out is, keep all the videos and the memes coming. I think, we can get a lot of new eyes on this when we show the absurdity of the situation. So I just want to give a huge shout out to all of your energy, to the mods who really make it a really wonderful community. So I just want to give everybody there huge love. And welcome
may
you
I
to our
add something
community.
on that one?
Pardon?
May I add something on the Wall Street Silver?
Please.
I don't know as much about the Wall Street bets. I hear they're in millions. Here, Wall Street Silver, I mean, they're growing by thousands each day, which is really quite impressive. So who was it? It may have been someone from First Majestic that I was talking to, where it's like what Wall Street Silver has done in the last 3 weeks has done multiples of everybody combined in the silver industry in the last 10 years. And I'm not saying that as derogatory but just the way, because, we're a bunch of old, Andy, I won't say anything. We're a bunch of old guys, and stubborn, and it reminds me of sports where you have the veteran team, and sometimes that rookie comes up and you bring that energy, and it's great because, I've been making the videos for years, and there's James Anderson and Rob Keens and the other guys that do that. But I think the reason that this has made such a difference is that, it's like I'll say something and then someone will send me a link, and there's people researching it, or all this stuff with SLV. I research as much as I can, but now it's like you have a staff of 31,000 motivated research analysts that, again, I can't predict the future, but I told you what I'm doing with my money and how it feels to me. We'll see if that's right or not, but this and to the idea, by the way, if anyone hears from the CFTC, because I know they said they're investigating Reddit, if anyone in Wall Street Silver hears from CFTC, please do email me directly about that, because anyone at the CFTC, if they want to hassle anyone in the silver world, please let me know. And because what is happening here is completely honest, moral, sharing truthful information. It's the exact opposite of the banks. And I would just second everything you said about Wall Street Silver and give a specific hand to Danny, who is one of the leaders, and also Dimitri, who's done some of the interviews. And I believe I'm going to be meeting Ivan at 11 a.m. Eastern time tomorrow to do an AMA, which I believe is Ask Me Anything. So I'll...
So get your questions in.
So anyway, with that said, thank you, Yar, and continue on.
My two last announcements is if you're not signed up for the Arcadia emails yet, please go to our website and sign up for that so that you can keep up to date. I try to get emails out before we do videos. So if you want to make sure that you're always catching all of the awesome content that Chris is making, please go to our website and sign up in that right corner. And also we are going to have a call to talk about next steps for potential legal action. So if you'd like to sign up for that, you can go to Arcadia Economics /Sue-JP/Morgan.com or /, and definitely get on that list. So Arcadia /Sue-JP Morgan, and you can stay on the list. Oh, you got to put the dashes in there. Sorry. Here, I will.
Yar, perhaps you can
I'll drop
add
it in the
link
chat.
into the description field, even if it's not there at the moment.
Yeah, I will add that
in there. And did you have another thing you wanted to mention?
I just wanted to thank you, Chris, for your 24/7 coverage of everything that's been going on, from the silver community to the power situation in Austin and the interconnectedness of how all roads of fraud lead back to JP Morgan. So I just wanted to end by thanking you for all of your diligence and hard work. And I know that this is fun for you, and but you have been going nonstop. So I just want to give you a major shout out too.
Here, here.
Here, here.
Well, I appreciate that. And there was something that changed. It was that call we did with Rob Keentz about 3 weeks ago, where I guess that was where I politely invited JP Morgan or Jamie Dimon to comment. And then, that was before I started seeing that the things with the audit and the SLV, and we'll leave aside there's something about this whole Texas power situation, which I'm not going to name a specific bank on that, but there's, I feel I've never felt more grateful the way people have supported me. And now there's companies sponsoring Yard. In fact, I'll tell one quick story before we wrap up. Yard, do you remember that last year at this time, we were basically deciding whether we're about to shut this all down?
I knew I was never planning on doing that.
Well, you knew it, but I'd run out of my savings. We'd almost drained yours. My mom was helping, and it had gotten to that point where it's like, all right, we got a couple more months. But I would say to anyone who's ever felt, like on a long journey, that when we're doing what we're meant to do, it does come together. It's been a blessing. Now I get to do this stuff, and there's, people like the Wall Street Silver Group taking it and running with it. And I guess maybe above all of that, that there's some unfortunate stuff happening out there, yet somehow it switched those couple of weeks ago. We're rather like, oh, can we ever end this? Or maybe one day, versus all those things I've studied with the metaphysics, where you change that question a little bit, say, okay, well, hey, I don't know how long it'll take,
but it's coming.
But I mean, I don't know what else I'm qualified to do. I used to be Dave Kranzler and Andy. They remember like the last couple of years while I was trying to figure out how to have a business that actually made money. And, partly I was freaked out. It was like, I didn't know what else I would do. And I tried so hard over the past decade to keep it going because it felt that important. And now to see It was somewhere in the last couple of weeks. It's like, I see it as like the boxer that's on the ropes and is just ready to be put out of his misery. And so I love that everybody honestly and honest people in an honest way are combining to share the truth and let these banks out of their misery. I wouldn't want the money and have to live with that. I don't think anybody I know or want to be around would like to sleep like that at night. So let them do what they do, whether they go to jail or not, I don't care, but that's my commitment to everybody who's watching and has been on the show. Unfortunately, as a few of our panelists know, we have quite a diversified portfolio. I don't diversify my portfolio outside of silver, but the ideas we have, which you guys will be finding out about in the next coming days, weeks, and months, which some of the banks will be finding out about in the next coming days, weeks, and months. So I know it's been a long wait, but regardless of what happens this week, just remember, Janet's going big. So one way or another, government will do what government does. And with that said, going to wrap up. Thanks again, everybody on my panel for being here tonight. Hope you have a wonderful week.
Thanks for having us.
Everybody at home. We will see you again tomorrow with some, I don't remember who's scheduled, but it'll be fun. And thank you for being here.
AMA on Wall Street Silver.